Hey guys, what is going on? Welcome back to the channel. Again, want to thank you all for supporting the channel. All the viewers, all the subscribers, immensely appreciate the support. If you guys do like the content, if you guys do like the video series, feel free to like, share, and subscribe. And if you are a subscriber, make sure to hit that bell button to get alerts and updates on all new content posted on the channel. Today, I quickly want to talk about a way of potentially hedging yourself against a large stock market crash. A way of really trading the volatility within the market to protect some of your longer-term buy and hold investments, actually by trading the volatility itself. We'll kind of talk about this in the video, trading against the VIX index, which essentially is a fear index. It is an acronym or ticker symbol for the Chicago Board of Options Exchange, CBOE Volatility Index, and it's really just a gauge of how much fear there is in the market. It's a fear index or fear gauge. And typically it has negative correlation with the way the stock market trades. So if there's a lot of volatility and there's a sell-off, this particular set of stocks, set of ETFs actually, will rise and offset any losses that you have in some of your buy and hold stocks. So it's a very good way, again, of hedging the stock market, especially during very high levels of volatility, very high levels of fear in the market. And when there's a lot of fear, there's typically sell-offs, and sell-offs can lead to market either big corrections or crashes outright. So this is a very good way of doing it. It's very, very complex, so I definitely would encourage you guys to read quite a bit about this. It's only really for short-term trading and short-term hedging of some of your longer-term plays, but definitely want to introduce that to you guys today. And again, there needs to be a lot of reading done about this because it's quite complex, and I'm still doing quite a bit of reading about it myself. So let's kind of jump into the video here. First, I want to talk about the portfolio. I thought it was going to be a very good day today. Early on in trading, I thought I was going to be up over $2,000 in the green today. However, as you can see here, I actually ended the day in the red, down 0.54%, 776.74. Did rebound a bit in after hours trading, 109.99. But you can see here, heading into afternoon trading here, the market really sold off a bit. And then right before market close here, really starting at 3:45 or so, 15 minutes, a big plunge in at least my portfolio. Again, ending the day in the red, 0.54%. If we can't take a look at the portfolio, and again, up top here is the new Robinhood cryptocurrencies. You can see here that I actually am watching all of these particular cryptocurrency coins up top here. You can see I'm on the list to get onto trading here, but I don't actually have this. No, there's some discussion saying that I was actually actively trading cryptocurrencies currently, but you can see here I have no holdings in any of these particular stocks, or excuse me, in any of these particular cryptocurrency coins. I'm simply watching these currently. Anybody can really do this. If you simply click in the search button, any sort of ticker symbol for these coins here, BTC for example, you can bring up the individual coin, or you can go ahead and click on Show All. It'll show you all of the coins that are currently being offered on Robinhood, or that will be offered on Robinhood once it's up and live, which it is not right now. So a very good way of taking a look, kind of seeing what coins are on Robinhood, and just kind of watching some of the coins here. And really they all kind of trade the way Bitcoin does on top there, BTC. Typically these are all in the green or all in the red. There's very few times in which there is one that is discordant from the others, one being in the red and the rest being in the green, or vice versa. They simply trade with Bitcoin, which is one of the negatives behind cryptocurrencies, which I'll talk about in another video. But if we take a look at the stocks on the bottom here, you can see most of the stocks here in the red. Again, there are a few stocks in the green. There are some earnings coming out for particular companies, so that's really driving the price of some of these stocks, including on the bottom here, Prospect Capital, I believe, was in the green by a large margin. Yes, 4.93%. And I also believe Disney had an earnings report here as well. Not a lot of movement actually with Disney. Not quite sure about that. But it is earnings season, so there will be quite a few stocks reporting their last quarterly earnings report. So let's kind of take a look at some of the volatility. Again, it follows the VIX index, which again is the Chicago Board of Options Exchange, CBOE Volatility Index. If we simply click on VIX here, you'll see a whole number of products here that are trading the fear index. Again, trading the volatility in the market. Some of the more well-known ones are VXX up on top there, as well as VXZ in the middle. If we click on VXX, you can see over the last week of trading, it's up 53.44%. This is leveraged, again, against options for the VIX index. You can't trade the VIX itself. You simply trade options. Again, it gets very, very complex. I don't want to go too much into that, but I encourage you to do some reading about it. And also VXZ here is another very popular one. This one is not quite as put on margin, so you can see it's only up 19.03%. Not quite as leveraged is what I wanted to say as the other one. So this one's up 19.03%. VXX is much more leveraged, and it is up 53.44%. And again, if we take a look at the year graph, you can really see how this spiked up here with volatility in the market. If we go back to the other one, it won't be up as high, but it kind of follows that same course as well. And again, there is not a perfect correlation between the market and this particular index, but this definitely will go up as the fear in the market goes up and as a stock market crash or large correction starts to emerge. So really, when you use these particular types of investments, you're really trying to do a couple different things. You're trying to profit from increases, again, in the expected volatility of the S&P 500, again, measured by the prices of the VIX futures contracts. It's not the VIX itself, that index, but the futures contracts that is associated with that index. Again, definitely encourage you guys to read a little bit about that. Very, very complex. And it's, again, used to reduce U.S. equity portfolio risk, some of your longer-term buy and hold stocks. Since really changes in the VIX short-term futures index, like all of these products are essentially, you can see short-term futures in the name of most of these here. Again, the more popular ones are VXX and VXZ. And historically, again, there's been a negative correlation between this particular short-term futures index as well as the S&P 500. So as the S&P 500 goes up, this would go down. And as the S&P 500 would go down or start crashing, this would go up in a pretty precipitous fashion as well. So really a hedge against any of your longer-term equity portfolio holdings, your longer-term buy and hold stocks. So again, it's only intended for short-term use. Investors should be actively managing this. I would not buy this and then forget about it. You need to monitor this very, very closely. Really just a day trading type of scenario. And again, it does not track the performance of the CBOE Volatility Index VIX itself. It tracks the futures contracts on that. Again, a little bit of a discrepancy or caveat there, which kind of is fairly complex, to be quite honest. But this is something that, if you're interested, please take a look at. Again, a way of kind of hedging some of your longer-term buy and hold stocks in your portfolio, especially against the market risk of a big correction or a crash. Again, tracking sort of the fear in the market, sort of called the fear index or fear gauge. When that goes up, typically there is a sell-off, and if there's a sell-off, this particular entity would go inverse of what the stock market is doing. So if the S&P 500 started trending down like it did the last couple days, these particular entities would start trending up. So again, you can see a list of them here, and you can take a look at any of these. They pretty much all do the same thing. The only difference is the amount of leveraging. Again, VXX here over the past week, because it's very leveraged, it's up 53.44%, but VXZ here is less leveraged, and it is only up 19.03%. But again, it's going to be doing exactly opposite what the overall S&P 500 is doing. So just wanted to talk about these. Again, this is meant to be an introduction. Did not want to go too in-depth about this. I'm still doing a lot of reading about this as well, but a very unique and interesting way of trading the market when there is a stock market crash, when there's a lot of volatility, a lot of fear in the market. So yeah, just wanted to talk about that in the portfolio. Let me know if you guys have any experience using these types of funds. Again, these are for short-term use only. Have not really used these at all. If you guys have, please let me know what your experience has been with these. Kind of learning about these right now, and as I do more reading, I'll do an updated video talking about exactly how you can use these on your portfolio. So yeah, just wanted to talk about this. Not to make the video too long, I'll kind of end it here. Again, if you guys enjoy my videos, feel free to like, share, and subscribe. Really appreciate all the support. Definitely appreciate all your guys' picks for day trading stocks as well as dividend capture stocks. Definitely a lot of great choices there. Again, I'm going to be doing a video about some of these in the future. Again, all user suggested day trading and dividend capture stocks. So kind of with that, I'll end the video, and we'll see you guys next time.